Hi guys, welcome to another honeystocks.com weekend analysis, and this one's going to be going out on the 1st or the 2nd of August 2020. It's been quite a while since I've done a big, what I would call a chart storm, where I'm going to be walking you through a lot of charts, some incredibly logical trade ideas and setups for the forthcoming week if you're technical in your approach. If you're somebody that's come through looking for valuations and talk about economic stuff, that's not what we do at honeystocks.com. We're technical in our approach. It doesn't mean that we dismiss fundamentals. It just means that I stick to my lane and I know nothing about fundamentals or valuations or economics, so I'm not going to talk about them. That just seems pretty logical. But if you are somebody out there that has a mid-term time horizon for your positions in the market, when I say mid-term, we're talking weeks to months, then this is probably going to suit you. If you are a day trader that likes to use minute time frames and multiple crossover signals and your charts look like nonsense, then this isn't going to be for you. But feel free to stick around. Hopefully you get some really good ideas. Hopefully you'll understand by the end of this analysis that my work is very, very unique, where I'm not talking about the magical hindsight indicators where I see a lot of analysts, especially on things like YouTube, they talk about previous history and they say they did this, they did that, but we all know the market doesn't work like that, and anybody that uses the magical hindsight indicator, please, you should just see it for what it is. It's a lot of nonsense. So I'm going to be talking you through what to expect. So stick around and let's go and dive into the charts. Now, most of you know this already, but please do pause the video and make sure you're comfortable with that before watching any further. There's not any investment advice and all that fun stuff. Maybe just to give myself a little bit of credibility, I'm registered with the CMT Association. I'm working my way towards my chartered status, and technical analysis is something that I'm widely known for. Again, hopefully that comes across with the charts. And like I said, if you get some value from this, please do subscribe to our channel. We would appreciate it. So, where to start? I'm going to start with 5 minutes just talking about the overall market before I get into some individual stocks and individual names. But let's start off with the rotation graph. Now, there's obviously many sectors that the market is made up of, but what I've done here is I've filtered out a lot of them to just show you where I feel like the strength is in the market. I'm not about buying weakness and looking for valuation discounts, etc. For me, it's just much easier to just buy strength in the market, buy stocks that are going up, because stocks that are making new highs, they are in uptrends, and that's really what we're trying to do, just to remove as much stress, but obviously maximizing returns. But we obviously know gold is on a rocket ship to Mars at the moment. We've got iPay, which is the payment processing companies, the Visas, the MasterCards. We've got semiconductors. We've obviously got the tech names, but we also have the Treasury Bond ETF, TLT, starting to move. So we have this really strange combination of, we've got the defensive safe haven assets starting to move into the leading areas of the market. If we think about the rotation graph, this is the leading area, improving, lagging, and weakening. So these are all moving into leading areas of the market. That tells us that these can be areas of focus. And obviously within that, we can filter it down. This, for example, is China at the moment. A lot of the Chinese tech names. Now, again, if we think about a rotation graph where they all rotate round in circles, where do we think China is going to go from here? They've already rotated down, they're now starting to rotate up. So the expectation is that, despite all the headlines that we have with China, etc., it's all, really negative from what I understand. But what's actually going on in the background? Are the stocks going up or are the stocks going down? Yes, they've had a little bit of a breather recently, That's coincided with a shift in the relative strength. But now we're now starting to see this momentum starting to pick up, and it does look like China can be an area of focus. Now, we all know there's a massive disconnect with the market and the economy. Again, I'm not going to touch on that. I think we all understand that it's terrible what's happening all over the world. Many jobs, many businesses, etc. affected. I've got many friends, family that are affected. But what I try to focus on is price, and really just to do what the market tells me to do, rather than trying to second guess the top in the market. And even if you're trying to take bearish positions and uptrends, I don't think that's a recipe for success long term. But I'm not going to judge anybody. But it does look like the S&P 500, we do have a bit of a support level here, and we can see that we are in an uptrend. We have trailing stops moving higher, so that tells us that the market's going up at the moment. We also know that the breadth of the market, and when I say breadth of the market, what I'm talking about, if you think about the market as, let's say a body, for example, we've got the S&P 500 as the body, but we want to know what's happening under the surface, how strong are the heart, the lungs, etc. We obviously know that the COVID-19 situation has been on a par with the financial crisis in terms of the drop that we've seen in the market. But what we have seen since then is obviously an expansion of breadth, and the percentage of stocks trading above their 200 period simple moving average is increasing, and that's what we would call an expansion of breadth. Now, there are many breadth indicators that I could get into and that I utilize to just gauge the overall health of the market. This is just one of them. We can see that it is increasing. To the other end of that, there are many stocks that are just not recovering, but we can see this expansion at the moment. We also have tech, which is just going out another monthly closing high. Again, it's not bearish that we've got the major tech names. We had a huge day on Thursday with all the big names reporting. I am going to be going over some of those individual names, but I'm just not really seeing anything overly bearish at the moment that would tell me to get defensive. There was a little bit of a wobble for me on Friday when we had the big numbers reported by Amazon, Apple, etc. And then we did see a bit of a decline in the overall market before a rally in the last hour. So again, if we can get follow through in this Monday, Tuesday, and we start to see these key resistance level, especially in the indices with the Dow, with the Russell 2000, hopefully that holds the 200 period simple moving average. Again, there was concerns on Friday that we're going to drop below this, but again, it does look like the weight of the evidence is suggesting that the market is looking like it's going to head higher. I touched on gold at the start. If you're bearish on gold at the moment, I think there's probably an issue with your strategy. The chart is just going out another closing weekly high. There is a test that's incoming at $2,000. I think if we get a move above $2,000, I think the precious metal space could really start to move. I did a little 5-minute video last week talking about gold, and feel free to go and check that out. But again, I cannot be anything other than bullish on gold. Silver, again, this has been absolutely massive over the last couple of weeks. Some of the individual names with the silver miners, etc., have really been taking off. We've got Treasury Bond ETF TLT has been on a steady uptrend. It's not the fastest moving, but again, those of you that are maybe looking for a bit more safety and you're not liking the volatility in the market, then absolutely TLT does look like it's poised to potentially break out and hopefully take the next leg higher. But when we talk about the volatility, we know that the market has been incredibly volatile over the last few months. We had a huge spike in volatility. It has started to trail off again. For those of you that don't understand volatility, there is an inverse correlation with volatility and the overall market. What that means is when volatility is spiking, the stock market is generally going down, and when volatility is going down, the stock market is generally going up. So I think volatility, and it always amuses me when I see it banded about that technical analysis on volatility metrics just is pointless. I completely disagree. I think if we get a breakdown below this level here in volatility, what we're probably going to see here is another leg higher for the individual names within, obviously, the equities market. So that brings me on to individual names. So hopefully you've got a pen and a bit of paper here. You might want to take some notes on any charts, because I think I've got about 30 here. But we're going to start off with why I am bullish on China as well. This is my own custom China tech index. I think we're breaking out here of a triangle pattern, and these are the individual names that are within my custom tech index. So that means that that there's a lot of names in here that you might want to do some due diligence on. I do have a couple of the charts already prepped though. But let's start off with the big boys. Amazon, again, this has been my chart since forever. I think you just remain bullish above 2,900. Ultimately, I do see this moving towards the next Fibonacci extension level. I think around $4,400 is a logical target. Facebook is very, very interesting. I think we might potentially be looking at a breakaway gap. For those of you that maybe have the view that all gaps get filled, I can assure you that all gaps do not get filled. Sometimes we have these breakaway gaps and the stock is never seen again. So I'll be watching this one with a lot of interest on Monday to see if this gets follow through. So I think Facebook, if it's not on your radar, it definitely needs to be. AMD reported solid earnings. Again, this is a chart where we sent an alert out at $60. It's obviously doing very, very well, but the reason I'm highlighting this one this week is that I think we're potentially looking at another breakout here. If we can get continuation here above 76.50, I think that's a level. Peloton, again, this has been my chart for a while. Again, I think we're looking like we're potentially moving higher here. I think if we move up, I think it starts to move towards $100. We obviously have to have an eye on earnings, because there's a lot that has to happen for it to get to nearly $100. That's a big percentage increase. But again, it's likely to be a momentum name, so I think that should be a stock for the radar. Microsoft is in a holding pattern for me at the moment. I think we're looking at a bit of a triangle pattern, and for me, I'd be looking to just set an alert for this around 210, 211, and I think that's a chart that we might well get the spike in volume and momentum that we all look for when we're trying to get those breakouts. I've had so many messages about this because of my price target call, I think around 6 weeks ago when I did my last chart storm, saying that the target for me on NVIDIA is 620. Again, it's not rocket science. We're just using technical analysis to help us. Again, a lot has to happen to get there, but again, it doesn't harm us to have these targets to aim for. And at the end of the day, it's all about managing risk anyway. So maybe you've bought in NVIDIA and you've been in this thing since let's say $100. Again, you're just using textbook trade management, and if you can identify these targets, because the last thing you want is for it to hit a target and then pull away, and then it's 3 years until you see that price again. That's what technical analysis really helps us with. CrowdStrike, I think, makes a lot of sense. I think if we can get above that 118 level, I think next target 144. I've highlighted ABBV this week. I had a couple of messages on this on social media this week. Obviously, we've had earnings, it's out the way, but at the end of the day, when we look at the technical side and A lot of you maybe will be watching, and maybe you don't value technical analysis as much as, you know, many others. Again, this kind of just goes back to what I was saying about identifying these key levels. We know $100 is a significant level for the stock. So again, no, just there's no harm in just saying, you know, thank you very much, Mr. ABBV, and then just revisiting it again when it breaks out above this level, or even if you want to buy on a substantial discount. This is what, you know, support and resistance really helps us with. So again, ABBV, I think a little bit of patience. I think above $100, it needs to clear. I think with MasterCard, again, just going back to the payment processing companies, I think you have to be bullish. I think this is building a bit of a base here, and I think the path of least resistance with MasterCard is higher. We've got Match, we've got earnings coming up this week. Again, something to bear in mind with earnings, you need to have a rule set in place. I would never advocate buying a large holding in the run up to earnings and holding through, because then you're at the mercy of the gap down. Because I'm sure most of us know this already, where we have, you know, incredibly positive earnings, but for some reason the stock declines post earnings. It's incredibly frustrating. So you need to have rules in place. I like to have a 10% buffer in place, and even that, you know, we can have gaps of, you know, 20. You know, we've seen it recently, 30%. I think it was with EHTH or maybe CYBR. I forget which one it was. But, you know, you need to have some kind of protection, unless you're obviously doing, you know, lotto plays on options, which again is completely valid. BYND report this week. I think this is a very key level for the stock. Potential head and shoulders pattern. Now, what I would say is a head and shoulders pattern is only confirmed upon a breakdown of the neckline. That has not happened yet, so we cannot call it a head and shoulders. So I think if you're out there and you're in BYND, I think provided this level holds, I think you can continue to be bullish. But again, I would have an eye on earnings, and I think if we break below that level, I think that's a big problem for BYND. But, you know, I suspect that the earnings on that one is going to dictate the direction in the medium term for that stock. So I would be looking to just wait for that information before acting on anything. I think it would be a bit of a gamble pre-earnings. We've got ENPH again. I think we're in a bit of a holding pattern. I think there's been a lot of negativity from certain capital funds, etc. But I think just when we observe price, I think if we break out here, I think above $65 would make a lot of sense. Going back to what I was saying at the start about about China, I think Alibaba above 262 would make a lot of sense. Again, it's not coincidence that the ancient mathematics has a place in the stock market. It's not a coincidence that these resistance levels are respected. So again, I think if you can get above 262 with Alibaba, I think it goes to 344. We have CDNS, which is broken out, positive earnings. Again, huge price target on this one, provided that, you know, the market does what we want it to do, which is to kind of go up. I think 155 makes a lot of sense. DocuSign, again, has recently broken out. Again, this is the weekly chart. Again, I've got a price target here of around 264, but I think it could potentially be close to breaking out again. Home Depot looks like it's breaking out here. It's been, I think, over the last 10 days, it's certainly been a very frustrating one. But ultimately, I think when we're looking at, you know, breakouts, there's potential that we're just looking at a bit of polarity here, which is resistance turning into support before taking the next leg higher. I would have concerns, however, if we break back below this level, that might be an indication that we're looking at a failed breakout, and I think you might want to consider just managing risk a little bit closer. With Square Inc, again, my chart hasn't changed for this since we broke out above $100. The target has been 143. We're very, very close to it. It's obviously a big momentum name. Earnings on this one, I think we're obviously going to drive us to that target, hopefully. My chart for Netflix has changed recently. I think we've got a very key support level here in place. So again, I think when we pull back to these support levels, provided that you get the bounce, it quite often offers opportunity to get back in or to maybe compound on your position. But I think Netflix, makes a lot of sense. I think provided that level holds, below that level, I'm not as bullish. Nike, we've got quite a way to earnings. I know that we've done nothing with Nike for what feels like forever. It's building in a little bit of patience here. I wouldn't want to be buying the stock and just holding here as it's chopping sideways. I think, again, that's where technical analysis comes in. It just helps us to, identify the stocks. And when a stock starts to move into these holding patterns, you can move your money somewhere else, and just means that you've constantly got your money working for you. But again, Nike, I think if we break out here, I think above $100, we're very, very close to it. I think would make a lot of sense. NVDA, this is a stock that reports earnings this week. This has been a massive winner for our members recently. Actually, we had a trade alert, and I'll probably show you that later. But we had a breakout there at $18. We've obviously had a massive move. I think, again, it's just in a holding pattern. Ultimately, if we get positive earnings on the 4th, I would see this breaking out, and I think that offers opportunity. So I'd be looking to just wait and see what happens with that. Wait for the earnings announcement, see what the reaction to the earnings is, and go from there. Same with Pan American Silver. I think, obviously, going back to the chart for silver at the start, this has been a big winner recently. Pan American Silver, and again, earnings on the 5th of August. I don't see any reason why they wouldn't crush their earnings, but we'll wait and see. But the trend is most definitely up. Same with PayPal, going back to the payments, etc. I think above $200 for a new entry into the stock makes a lot of sense. For those of you that have been in here and you've absolutely crushed it, congratulations. I'm always mindful of these psychological levels, the $100, $200, $1,000, $2,000 levels. It's amazing how price can stall there and just do nothing for a couple of months. So I would be looking at this level, but I think, again, above $200, it's difficult to be anything other than bullish. Roku, earnings again this week. I think we might potentially be breaking out in the run up to earnings, so that might be interesting to some of you. I was asked about Starbucks again this week. The chart's doing nothing at the moment. There's not really a lot to say about it. I think if you were to have bought down here, that would have been valid. But again, we know that when stocks are in this sideways range, we know that you just need to buy it at the bottom and sell it at the top. It really is that simple. But again, I think for any new entries, I think above this level, around 84, would make a lot of sense. But if you're buying in here, it's just chopping about sideways. It could even come down here again before going higher. We just don't know. It would be total guesswork. I like to take optimal entries into the market. I think it's fair to say that that's what my work is known for. Trade Desk, again, earnings this week, looks to be breaking out in the run up to earnings. Let's see what happens there. I think Slack is in a bit of a holding pattern at the moment. Now, this is a very ambiguous and loose bottom trend line. I don't know if it has any validity as yet. I've built it in because it seems to be the only one that makes sense. Technical analysis is very, very subjective at times. This is one of those occasions. So I think this should be a level. I think you can be bullish above this level, but I would obviously have one eye on this level around $34, $35. The stock has been very, very frustrating. I think most of us understand it's a really cool product, but the stock price has just never got going, which is really what I'm concerned with, and that's why I'm more technical in my approach and than what I am obviously with the fundamental side of the game. We've obviously got Zscaler. This has been on a huge uptrend. I think above 122. I think it's very difficult to see this stopping. So it's amazing just how far this has come. Again, this has been a massive winner, but I've got a target here at 176. I think Cisco Systems, I think, makes a lot of sense. I think this a trend line that I think we can say that it's valid here. I think there's enough touches there. I think we're very close to a potential breakout there. Now, FireEye Inc. might be a new name to many of you. Reported earnings. Again, this is really about the only thing I really keep an eye on when it comes to earnings. I just want to see what the reaction is, and then I'll look to see loosely what the consensus view is. And consensus, I'm seeing headlines, record numbers. So again, are we looking at a breakaway gap here? Flag pattern. This is previously traded at $95 as well. So, we don't know how far it's going to go. And I think ultimately it comes down to whether or not Wall Street wants to own it or not, whether the big money wants to own it. But again, it's not a bearish development that we're breaking out and we're posting record numbers. So I think that warrants a bit of due diligence. We've got Nuance Communications. Again, we've had a recent breakout, successful retest, and price is just now slowly starting to make its way. I think nearly $30 would be the upside objective there. But again, like a lot of these charts, we've got earnings coming up this week. Pinduoduo, again, this is one of those Chinese stocks that I touched on at the start. It's obviously broken out. It's doing very well. We actually posted this one to our members on Wednesday, actually, just in our halftime report. It's broken out. It's moving very well. I think ultimately we go and test $100 again. But again, if China's breaking out, we're just looking to identify the strength. We're not overcomplicating it. Jumia Technologies, unbelievable move this week. I think, from what I understand, I'm seeing headlines African Amazon. I don't know if that's accurate or not, but again, huge momentum behind this. It's on an absolute rocket ship. Will it pull back? I mean, we've got an RSI up at 82. That would suggest that it might, but again, we see with these momentum names like Tesla, etc., these things can really get legs. So it'll be interesting to see what happens with that one Monday, Tuesday. Barrick Gold, again, aligned with gold. It's breaking out. I think we've had a valid retest here, and the expectation is that this starts to kind of move higher. So yeah, I think Barrick Gold should probably be on the radar. And we've also got Datadog here. Now, this is actually one I posted to social media, the chart for this during the week, just saying how, with technical analysis school, what we're trying to do is identify the trend of the stock. And I think one thing that I understand is that a lot of the time when we have really incredible uptrends like this, and we start to get bearish chart patterns here, and we're talking about a head and shoulders pattern here. Like I said at the start, at some point during this presentation, the head and shoulders pattern is only confirmed once the neckline is broken. And when we've got an uptrend and we've got a pullback or a sideways move, when we see the 50 period simple moving average act as support, that tells us that the trend is still intact. And this is what I was saying, because I've seen a lot of charts for Datadog saying that it's a bearish chart, but it's really not. I think you just have to understand that the trend of the stock, understand what key support levels are, and understand that these chart patterns are only confirmed upon a break, and we just never had that break. So again, those of you that made money on that chart this week, congratulations. I'm sure it's been a really good winner. So yeah, I think that's a lot of the charts that I really wanted to talk about this week. Now, as I said at the start, if you are somebody out there that struggles a little bit, or maybe you're just looking for a little bit more consistency in your decision making and your charting, etc. Obviously, what we do at honeystocks.com, we provide a really comprehensive, I suppose would be the right word, research platform. We provide an incredible amount of information, knowledge, and obviously clean charting to our members. Now, those of you who have maybe been on the website recently will realise that the website's been completely redone, upgraded. You're able to go ahead and process everything online now. But just to kind of quickly walk through what our membership provides, we obviously have our weekend analysis, which we reserve for our members. We provide a midweek halftime analysis as well. It's I suppose a bite-sized chunk. We've obviously got a trading community, technical analysis, or charting support. It's all included with our membership. But I guess, the one thing that I think gets me more attention than most analysts is the trade ideas, because I publish all of our trade alerts on our website for complete and open transparency. Most of you already know that I'm registered with the CMT Association. As such, I have a very strict code of ethics that I need to follow, and all of the information published there is as fact, and how the trade ideas have gone on to perform. So again, feel free to go and check that out. All you need to do is just click on track record and that will take you through. But with the trade ideas, if you're not sure what our trade alerts look like, this is an example. This is NVDA. We provided an alert on this. This is up at $30 odd now. I think it had a high of 36. That's a stock that moved 80, 90, 100%. We've got Zscaler, which is still paying our members at the moment. We've got Pan American Silver there. Again, this one's up at 30 odd dollars now. It's been another huge winner. Twilio, again, this is one of our charting support charts. Breakout above 100. This is way above $200 now. That's the approach that we have. Now, again, to go back to what we provide our members at the weekend, this is the performance of the stocks that we provided our weekend analysis last weekend to our members. Obviously, all the charts went alongside this list, but again, this is the weekly performance. Again, go and have a look at our trade ideas. We're completely open with absolutely everything that we do. So again, feel free to go and check that out. But we genuinely make really big impacts on our members. There's Rob, $45,000 for June. Terry beat pneumonia, then had his best quarter in 10 years. We've got David there, $12,500 on options. Jamie, 150%. 50% account growth there as well. James, it's an incredible community that we've built, and as most of you know, we do place a limit on our memberships. The reason that we do that is I don't have any grand plans to have the biggest trading community in the world. I couldn't think of anything worse. For me, it's more about quality over quantity. That's why I keep membership numbers small, because I provide so much support on a day-to-day basis with our charting that if the community was full of thousands of members, there's just no way that the performance and the quality would be what it is. So I have a quality over quantity approach. I'm very, very happy with that. So I think if you're looking to maybe get away from day trading, maybe you find it a little bit stressful, or maybe you've had a lot of beginner's luck recently, which I know from many conversations that I've had recently that's a big thing. Maybe you're looking to learn technical analysis. Maybe you don't have the time to filter through thousands of stocks at the moment. What we are doing with our members at the moment is we are providing full access to our technical analysis program. So if you are somebody that would like to learn how to chart, or maybe you're more into valuations and the fundamental side of things, but you've now realise that it's, you know, a lot of the time it's a technical game as well. Maybe you want to just pick that up. We have a facility there for you to do that. But, you know, as I said, feel free to go in and check out our website. I don't know what your deal is, but if you are looking to progress things, then you can do it all on the website now. There's no need for, you know, back and forth emails, etc. But we've got, I think, around 28 membership spots left. So again, feel free to go and check that out. But if you've stuck around to the end, thank you very, very much for watching, and maybe we will be able to welcome you soon. Thanks very much.